What's good and welcome back to Investing with Jack. So today I was reading an article and I believe it was titled Better Cannabis Stock Aphria versus Sundial Growers. However, it was extremely vague, so I thought I would do a bit of a deeper dive into this subject, compare the financials, compare the outlook, compare the highlights of these two companies to determine which is a better investment moving forward. So if you enjoy or get any value out of this video, please smash that like button. If you're interested in cannabis stocks as well as penny stocks is mostly what I cover on this channel, make sure to subscribe and turn on notifications if you're new. So we have the largest merger in the cannabis industry coming up between Aphria and Tilray. And for Sundial Growers, they are starting to collab with other companies. They have eliminated their debt, and I believe they are setting up for major growth. So first, we're going to talk about Tilray. We're going to briefly go over each company's financials, their highlights, and the outlook moving forward. So the revenue increased for Tilray by 26% to $210 million in 2020 compared to the prior year. Net loss was $3 million in Q4 2020 versus a net loss of $219 million in Q4 of 2019. So that is a major decrease in net loss, which is a great sign for this merger going forward. The achieved adjusted EBITDA goal was $2.2 million in Q4. So a couple of the key highlights. Now, anyone who is invested in these companies, you probably already know this, but for anyone who's new, it's going to be really quick. It's just going to be a few of the key highlights of each company. So on December 2nd, 2020, they announced they had signed a cooperation agreement with Hormosen for the promotion of medical cannabis extracts in Germany. On February 4th, they announced a partnership with World Pharma Biotech and their first export of medical cannabis from Portugal to Spain. And on February 9th, they announced a new agreement with Grow Pharma to import and distribute Tilray medical cannabis products in the United Kingdom. So both Aphria and Tilray have been doing quite a bit of expansion into Europe, which is a fantastic sign moving forward with this merger. In the last 3 months, Tilray is up by 196%. Obviously, a lot of the cannabis stocks have been surging right now. So if we look at Aphria, their gross cannabis revenue was $204 million in 2020, which is an increase of 129% from $89.4 million in 2019. Their net revenue, $543 million in 2020, an increase of 129% from $237 million in 2019, and they had a positive adjusted EBITDA of $17.2 million in 2020 compared to a loss of $27.7 million in 2019. So both Aphria and Tilray, their financials are extremely positive, which of course is a great sign for investors with this upcoming merger. So Aphria, some of the key highlights: Aphria Inc. strengthens leadership position in Germany. They closed their acquisition of Sweetwater Brewing Company, which is an Atlanta-based brewing company. It's so funny because I was in Atlanta in January and I went to Sweetwater and they had a 420 beer and I was like, I'll try that. And little did I know it was Aphria who was behind that. So that's pretty cool. Nobody cares, Jackson. All right. So Aphria is up 111% in the last 3 months. So let's talk a little bit about the highlights and the outlooks of this upcoming merger. So it will be under the name Tilray after the merger, and they will claim the #1 market share in the Canadian retail cannabis market. It will be a major player in Europe with Aphria's existing position in Germany and Tilray's Portugal operations. The company will also have foothold in the U.S. with Aphria's acquisition of Sweetwater Brewing and Tilray's Manitoba Harvest Hemp Foods business. So while the company will be named Tilray following the close of the transaction, Aphria is clearly in the driver's seat. Current Aphria chairman and CEO Irwin Simon will serve in the same roles with the new Tilray. Aphria will hold 7 of the 9 board seats. So that's something that's really important to consider if you're holding Aphria or if you're considering investing in the company, is they will be holding 7 of the 9 board seats, which means they will have most of the control over the company. And the Aphria shareholders will receive 0.8381 shares of Tilray for each Aphria share they own. Tilray shareholders will keep their existing number of shares. This presents an arbitrage opportunity for investors. So the Tilray CEO, they expect for US to implement a federal program at some point in the next 18 to 24 months, which means they are expecting legalization in the next 18 or 24 months. And Mr. President Joey B. Biden, or just Joe Biden, he's already promised that his administration will support legalization medical marijuana. He also supports expunging criminal convictions for cannabis-related offenses. Good job, Joe Biden. I totally agree. Why are you arresting people because they're smoking a joint? Like, it's just crazy. This is why so many of us are so extremely bullish on the cannabis industry, because once Biden legalizes, whether it's in the next 18 months or the next 3 years, we are going to see those share prices go sky high, and we're all going to make a pretty penny. So let's talk about SNDL. Let's quickly go over their financials. So they had a net loss from continuing operations for the 3 months ended September 30th. It was $71.4 million compared to a net loss of $32.8 million for the 3 months ended June 30th, 2020. And their adjusted EBITDA for cannabis operation was a loss of $4.4 million for the 3 months ending September 30th, 2020, compared to a loss of $3.9 million for the 3 months ended in June 30th, 2020. And their net revenue for the 9-month period was $47 million, and the year before it was $48 million. Now their Q4 fiscal year financial report will be announced on March 17th, so that is an upcoming catalyst. Yes, the financial is not looking good for this company. Yes, they are losing money. However, I don't think that you should cancel them out or even be worried as an investor, as I see so much positive growth coming for this company, and that's kind of what I wanted to go over. So some of the key highlights is the principal amount of debt outstanding decreased by $23 million during the third quarter. A total of $100 million of debt has been eliminated year to date, and current cash on hand stands at $60 million. So this is a debt-free weed company, which is an extremely bullish sign moving forward. The company completed a restructuring that completely wiped out its debt. They also closed a $22 million strategic investment into Indiva, which is now positioned for top line growth acceleration. And Sundial also took advantage from their tremendous gains thanks to Wall Street bets. And the company closed a $74.5 million registered offering, after which the company reported $610 million in unrestricted cash. So all that money is going to go back into the business, into the expansion, and into growing their brands. So they do have the collab with the brand Chocolate to further expand into the edibles market. The company has a 50% equity interest in Pathway RX. The license agreement with Pathway will allow the company to use certain cannabis strains for commercial production, which will help Sundial make inroads into the medical cannabis segment. And the company has also appeared to resolve some of the issues with their cultivation processing that weighed on its Q3 performance. It's also transitioning more to branded products from selling wholesale. As the Canadian cannabis market grows, Sundial could see its financial position improve significantly. So for all of us holding Sundial, you kind of have to not look at the financials right now and focus on the expansion, focus what they're doing with these other brands, as well as completely eliminating your debt. Now, which is a more strategic, more, how could I phrase this? I'm just gonna put it in layman's terms and say the safer investment is Aphria and Tilray. And I think that's obvious with their financials, with this upcoming merger, with them being this being the biggest cannabis company in the industry. I would say the safe money is with Aphria, and if you're looking for a swing trade with this upcoming merger, that could also be a great possibility. So with the upcoming merger, and when President Joe Biden fully legalizes, fingers crossed, marijuana in the United States, I easily see Aphria, which will now be named Tilray, being worth $80 to $100 a share within the next 3 to 4 years. Now that would be around $17 a share, so around a 6 to 7x on your investment. However, with Sundial Growers, there's more risk. The financials aren't looking good right now. But if you look at this company's outlook, if you look at what they're doing, you can see how much growth potential that this company does have. And once the legalization goes through, that will open up such a massive market. And I believe Sundial Growers will become profitable. And I believe they will be well, what could I call them? They will be a powerful cannabis company moving forward. Now, they're only $1.19, so the potential for them to 10 to 15x, the potential for the stock to go in between 10 to 15 to $20 in the next 3 to 4 years is very achievable in my opinion. So yes, there's risk in the short term, but I think you have to look at these cannabis stocks as long-term plays, and you have to look at what's going to happen after the legalization, and all I see is good signs for both of these companies in my opinion. So as I said, I do think the safer play is with Aphria. However, Sundial is a penny stock, more risk, but quite a bit higher reward, as it could go 10-15x in the next 3 to 4 years. And I do see that happening in my opinion. This is not financial advice, so I just thought I'd bring you guys that little video. I hope you guys enjoyed it. If you did, make sure to smash that like button, subscribe, turn on notifications if you're new, and I'll see you in the next one. Much love, guys. Take care.